Welcome back to Yahoo Finance Live this morning. The Bank of America Fund Survey dropped today with more bad news on the recession front. Yahoo Finance's Jared Blikre is here with the takeaways. Jared, what jumped out to you?
A couple of different things here. First of all, there's a huge contrarian buy here, but it may not be reflective of the lows. Michael Hartnett and team over at BofA have been on this all year long. They've been very good in terms of the tactical timing of things, as opposed to other people who really got a lot of this year wrong. So the first one is chart 3 from their latest report saying net percent saying recession is likely highest since a COVID high. Well, guess what? That is on the rise. And when that happens, you have people who are allocating people who are allocating capital at these companies. We saw this reflected in the Walmart results this morning. They might be a little bit more reticent to place some money in capex or in buyback. So what we see is a hesitancy on their part, and I think all of this is going to start hitting earnings, especially next year. Probably heading into an earnings recession, and then we'll head into an industrial recession, and then a regular recession. That's kind of the progression of how these things usually work. And then you take a look at where inflation expectations are for the next year. They're coming down pretty handily. I think it's pretty safe to say that goods inflation probably peaked right now, and so we still see elevated services inflation. But you can see most of these participants, and these are people who manage $1 trillion worth of assets on net, expecting inflation, headline inflation, to fall to 4 to 5%. That is from a reading of 7.7%. So you put it all together, we're still not out of the woods just yet, but combined with the technical action that we've seen off of these most recent lows, I think a lot of people are wading their feet into the waters here, which is probably a good idea. But in terms of the indices, even Hartnett doesn't see the S&P 500 going much above 4,100. That's a target that I've seen a lot of analysts come out with, and I think it's reasonable to expect that, well, yeah, we're probably in for a few more months of consolidation, maybe punch through those lows to the downside. Who's to say? But I like what they are saying. Rent the pivot. Rent the pivot. It's yours for a little bit. Enjoy the rally while it's on, and it could very much go away. It could disappear.
Interesting term, Jared. Right out of the chute on this report, fund manager sentiment still uber bearish.
Yeah.
Isn't that a good contrarian signal sometimes? It
is, and they have the Bank of America Bull and Bear indicator, which has been at 0, and so 0 is about as low as it can get, I would assume, and it's been there for weeks, if not a month or 2 months, and that is a huge contrarian buy signal. However, it's in concert with a number of other things, and not everything is lined up just yet. Interest rates, I think the street is still not expecting cuts. There isn't a high enough percentage of people on the street in the survey who are expecting rate cuts yet. Once that comes down, I think Hartnett and team will probably turn on the full pivot spigots here, maybe in another month or two. I don't know, but we're still in this neutral zone right here.
Maybe then they'll buy the pivot instead of just renting the pivot.
Yeah.
Appreciate you, Jared, reading through all 75 pages of this in about 20 minutes. Jared Blikre, thanks so much.